2025 was pretty much a blockbuster year in terms of IPOs. Do you see that being replicated in 2026?
Absolutely. I see that trend continuing. The pipeline's very, very healthy. Last 2 years were 20 billion IPO years, and I see no reason why we can't have a third.
AI is now being treated as almost a national resource, a natural resource.
Yeah.
Every large nation is going to want to control this resource. Not all countries will have the capability to do it, just like not every country has a space station. We have a company called Airbound. It's a fantastic company. The founder is 20 years old, and he back when he was 17.
How does that make you feel, by the way? You know, I've been asking myself that question.
Very old.
You know, you meet these 17-year-olds, 18-year-olds are already on their way to becoming unicorns.
Very energizing.
How does it make you feel?
Yes, very old and very energizing. But I also feel like, oh my God, what the hell was I doing when I was 17?
A bet that surprised you and one that you believe will surprise the market.
See, as an investor, I'll never say I was surprised because I'll say,
I always knew.
I want all of us to contrast. If you are a founder in the US versus if you're a founder in India, where do you think the stroke of pen risk is higher?
The stroke of tweet risk.
The stroke of tweet risk.
2025 marked a reset for venture capital. After 2 years of caution, global investors returned, but this time with sharper filters, tighter valuations, and a renewed focus on fundamentals. Funding remained selective, but one big signal of confidence was the startup IPOs. As many as 18 companies, including Lenskart, Grow, Meesho, PhysicsWallah, and many others, hit the markets, raising over 41,000 crores. The message from investors is clear. Capital is back, but discipline is king. Hello and welcome to Young Turks Reloaded. I'm Shireen Bhan, and today we deep dive into Lightspeed, a venture capital platform that has been investing in India since 2007, raised over $9 billion across new funds in 2025, with more than 40 billion under management today. Joining us to talk about Lightspeed's bets in India, its most defining startup stories, is the team from Lightspeed. They've made bets on companies like Razorpay, Zepto, Acko, Oyo, ShareChat, and PhysicsWallah, from agentic AI and deep tech to fintech, SaaS, and the next phase of India's consumer internet. Lightspeed is placing some of the most consequential bets in the market as we look at the startup ecosystem. So where is the smart money heading in 2026? Are Indian startups ready for the next IPO cycle? And how big will AI, deep tech, and India's consumer boom really get? To decode all of that, we're joined by the Lightspeed India and Southeast Asia strategy team, Anuj Bhargava, MD at Lightspeed. Also with us, Rahul, Taneja, partner at Lightspeed, and Hemant, Mohapatra, partner at Lightspeed. Gentlemen, welcome to CNBC TV18. You're here in the newsroom, and this is your first newsroom experience, I understand.
Great energy here in the newsroom, for sure.
Well, it's much quieter than it usually is. But Happy New Year to you folks. Anuj, let me start by talking to you. You know, let's rewind to 2025. I just read out a whole host of companies. Many of those are your portfolio companies. They IPO'd in 2025, and that really perhaps was the watershed trend through 2025, companies hitting the IPO market. What else would you put down as the sort of highlights of the year gone by?
First of all, Shireen, thank you for having us here, and Happy New Year again. But you're absolutely right. I think 2025 was a fantastic year for Indian capital markets. To give you some headline stats, I think we saw 20 billion of IPO capital raises, which was a slight increase over 2024. And a lot of this activity was actually back-ended. I think you named some of the marquee listings that have happened. And, you know, we expect that trend to continue into 2026. The momentum remains very strong. I think the one thing that has stood out for Indian capital markets is not just the value, but the sheer volume of deals. So last year, there were over 100 Mainboard IPOs, which is more than any market globally. So you see the capital raising is actually very well spread across companies of various stages, sizes, and sectors.
Why do you think that's the case? What has changed? Why have we had 100 Mainboard IPOs suddenly out of India when there was a lack of conviction on whether Indian startup companies would in fact make it to the IPO market? What has changed?
The reasons are first principles and fundamental based. India remains a structurally high growth market. The quality of innovation in India is world class. And there is a significant amount of domestic capital that is now available for new age companies, backing the right founders, the right stories. And we're seeing a culmination of everything that we have hoped and planned for over the last many years play out now in front of us. So we're very excited. And as I said earlier, I think we expect the trend to continue. The pipeline for IPOs is very strong. And the market is there.
You know, I'll talk about the pipeline for IPOs in just a second, but Rahul and Hemant, and I want you to chime in on this trend that we've seen, this turn that we've seen as far as the new age startup story is concerned, with most of them IPOing at this point in time and many slated to IPO in 2026. How much does this have to do with the fact that there was some risk aversion in the private market and perhaps founders had no other avenue, no other option but to tap into public markets? And the other big signal that we saw coming through from the IPO market was that majority, or a large significant chunk, was actually the OFS, where you were seeing investors taking cash out on account of exits, promoters pretty much doing the same. Companies did raise to fund growth, but a majority was actually giving a cash out to investors as well as the promoters. I want the three of you to talk to me about both these. And Anuj, I'll start with you.
Look, I think the mix, Shireen, of primary and OFS remains very balanced. In the many names you mentioned, I think a large chunk of the capital raise was actually primary capital. Perhaps in the first wave of IPOs that we saw in 2021, you would have seen more of an OFS component. But I think that's remained fairly balanced now. Look, in addition to the OFS, there's been a large chunk of public blocks as well as private secondaries. And we're seeing an increasing trend of M&A transactions as well. So, to your point earlier, IPOs remain a very viable source of liquidity for early stage investors like us. But there's several avenues, both before and after IPO, to generate liquidity as well. So I think, to your point, OFS and primary is a lot more balanced in the current wave of IPOs than it was in 2021.
In 2021. Hemant?
It's just the outcome of a maturing cycle in India. When I came to India in 2018 from the US, it felt like we were still mid-cycle of the first set of internet companies that were maturing. Now what we see, and Anuj sits more on the exit side of the house and we sit more on the entry side of the house. We see far more mature, methodical and ambitious founders coming in the door. We see businesses that were beginning 10 years ago and now maturing in economics. We see private markets maturing more and having more sophisticated point of views on where the outcomes could land in 10 years from now. And the public markets are also matured. They are much more sophisticated about where to put their capital in. And outcomes like Zomato have absolutely helped. I mean, 70% of their value accretions happened in the public market. I mean, it's very hard to sort of...
And in the last few years.
In the last few years. So, I mean, whenever a new cycle begins, an extra zero gets added to the outcome sizes, right? So we are entering a new cycle now. So I expect this trend to continue more. And I hope that the maturity just continues to sort of grow from here. But that's what we see a lot more happening now than we were seeing 5 years back.
Rahul?
Look, founders and investors have wanted to do IPOs for the longest time. It's not a new thing. And I think one of our earliest exits was IEX, which went to an IPO halfway through last decade. It's a very viable source of exit. But I think one of the things that was missing was maturity from the public market investors on how to grok companies which will still continue to invest in growth and therefore will not look like high profitability for a while. Zomato was a big step in that direction, and then there have been many, many others. I think what you've seen over the last 5 years is the market has matured enough that not just institutional investors, but also retail investors understand these stocks. In fact, they encounter them in their daily life, so they understand the importance of these companies. It's the maturity of that curve happening. I would still say we are far from where the US public markets are in terms of appreciating assets like these, but I'm sure we'll get there in a while.
Well, the US market has been through a lull as far as IPOs are concerned, and India clearly has been the outlier from an IPO perspective in 2025.
Look, absolutely. To Rahul's point, I'll just say that maturity has come both from investors, but also founders and early backers like us, because I think what you saw in the first wave of IPOs was that the companies were very high growth, but also very high cash burn. And that has changed to be a lot more balanced towards growth and profitability.
Let's talk about the big theme, AI, Hemant, and that continues to play out globally as well. Anthropic, another company that Lightspeed is backing globally, likely to IPO in 2026. That's the expectation. But let's talk about India. And I want to pick up on what Jensen Huang said, that, the AI plays like a 5-tier cake. From chips and infrastructure to applications at the very top. Now, where does India play in all of this? We're trying to do infrastructure. We're also trying to do chips. We are doing applications. The fear, however, or the concern and the apprehension is, have we missed out? How do you see the India AI story?
We basically, right now, as Lightspeed, we are in every part of the world where there is entrepreneurship happening, and we have essentially pivoted the entire firm around AI. As a result of that presence that we've got everywhere, and the visibility into the entrepreneurial ecosystem, what we have begun to see a couple of years back is AI is now being treated as almost a national resource, a natural resource.
Yeah.
Every large nation is going to want to control this resource, the way they want to control minerals, water, energy. They want to control AI. Not all countries will have the capability to do it, just like not every country has a space station or has been able to go to the moon. But those who want to and can will do it. And what we are seeing globally is the supply chain of AI is fragmenting from the very bottom, from the ASML chip to the NVIDIA, AMD, Intel layer, to the layer that sits above and around it, the people that build all these things. Above that are the foundation models, the data layer, infrastructure, application, all. We're seeing fragmentation across, more at the bottom, less at the top, but we absolutely see fragmentation and the desire to control it. So we are seeing it in Mistral in Europe, where there is fragmentation, and Europe is sort of starting to separate on these layers from the US. China obviously is its own island. US is starting to really control all the layers at the same time, and so is India. I think if you think of AI as a natural resource, that you have to have some semblance of control and protecting the market from external forces, you would want to the conclusion you will draw is we should control some, if not all of it. Where we are exerting a lot more control is the data that sits on top of the models, some part of the foundation model layer where we have made an investment in a company called Sarvam.
Yeah.
And some parts of the chip ecosystem where I think we are not at the point where we can build an NVIDIA or an Intel equivalent, but we can certainly do local manufacturing, local packaging, and hopefully global selling from here. So those 3 layers we are doing right now. Below that is the energy layer, where we are spending a lot of time trying to control both nuclear, wind power, and other forms of energy. But we expect this to continue over the next 5-10 years. We don't expect it to slow down. In fact, we are seeing it accelerate in other markets. So we think this is an important layer to have some control as a sovereign state, and India should do it.
So let me push back on that. And again, the question being asked is, who's India's answer to NVIDIA? Who's India's answer to Alphabet? Who's India's answer to OpenAI or to Anthropic? Is that a fair question to ask? Is that a fair comparison to make? Your bet on Sarvam, for instance, in a world where ChatGPT, India has now emerged as its 2nd largest market already. Everyone's throwing free services to the Indian consumer. Everyone's developing here in India for the global audience. What will be the moat for a Sarvam AI, for instance?
It's a great question. I think we debate this internally very frequently. I think the playbook that we've got is not to go compete globally in a ChatGPT kind of space. We don't think that's the right play for us. We think India is going to be a market where you're going to have to drive top-down board-level transformations that will continue for 5-10 years. And that requires a level of sophisticated access, understanding of the local market, the local nuance, the local culture, and driving those transformations at the board level down, relationship first, not product, bottom-up product first, which is what works in the US. Because it's a sophisticated market, they will try 5 things and pick one. Here, it has to be very relationship top-down. That's what Sarvam is really good at. That's just the enterprise market. On the government side, I was at least surprised and shocked to know at one point that one of the mid-sized government agencies spends $400 million in software just software, right? And that's gonna get transformed to AI. These are large value pools that nobody is addressing. I mean, we don't think that the Indian government, if they want to use AI, they're going to use a Chinese open source DeepSeek-like model. We don't think they're going to use an OpenAI private proprietary model from the US. I don't think they can even use a open source model from India. They have to use a model. A model is just part of it. They have to use a company that can take the model, build solutions on top of it, drive all the way down to the infrastructure layer, build data centers for them, run data centers for them, bundle everything together from a solutions point of view, and drive change and own the change. And we'll get paid for that. That's what I think the Sarvam model is, both on the gov and the enterprise side.
Is Sarvam ready for that?
We'll have to be. There's no choice. If we don't do it, nobody's doing it. Nobody can do it.